Welcome to the Tax Awareness Show. My name is Disebo Makhetha. I'm your host. And today in the studio, I've got Disebo, who is currently specializing in transfer pricing. But of course, she does other types of tax. So we're going to have a chat with her about her career and some of the lessons she learns during her work at SARS as a tax auditor, what you can learn as a taxpayer, particularly you as entrepreneurs, what she has been exposed to, and some of the mistakes that she has seen in her career that entrepreneurs or taxpayers in particular makes. Disebo, welcome, and thank you so much for honoring our invitation.
Hi, Shilly boy. Thank you for inviting me.
That's great. Tell me, maybe let's start with this thing. What is the most sort of an interesting thing that you've encountered in your career in tax?
Look, I think we, as when you do your BCom accounting degree, you have majors. One of them being tax. I think a lot of people don't see it as a career option. I did, certainly from varsity. I found it intriguing that we need to generate income for the fiscus, but we also need to keep businesses alive. So the various deductions that were provided in the Income Tax Act, how gross income is defined, I always found those areas of tax very interesting, particularly international tax. How then do we quantify the tax when a taxpayer has operations in other countries? So I found it to be a very interesting space, which I grew very fond of, and decided from that point on that my career will be in tax. And I've been learning since, because tax is evolving. There are forever amendments, there are forever changes to improve efficiencies for both taxpayers and the revenue authorities. So that's in a nutshell what I found interesting, that it's a learning environment and you'll forever be learning.
Speaking of revenue authorities, you worked as tax auditor for SARS, am I correct?
Correct.
Yeah, but working as a tax auditor, maybe before we even dwell into that, what does a tax auditor do?
A tax auditor looks at the affairs of taxpayers to determine compliance against the Act. So we have various acts. We've got the Income Tax Act. We've got the Value Added Tax Act. And essentially what the auditor does is to ensure that taxpayers are following the guidelines as provided in the Act and are applying those correctly in their reporting and paying the due taxes, of course, to the revenue authority.
Okay, that's interesting. But speaking of compliance with the relevant tax provisions, what has been some of the common mistakes that you've seen or you've encountered that you've seen that taxpayers or entrepreneurs in particular are making?
Sure. I think people or taxpayers generally do not understand how the application of the law acts. I mean, the law is done. So, for instance, when you look at deductions, your Section 11A, it would say you are entitled to deduct any expenses that are incurred in the production of income. Now, what is in the production of income? It's essentially any expense that you've incurred to generate income. So even if you have a company and you have cars and you fill up at a petrol station, that is an expense in the production of income. So you need to retain the relevant documentation. So the mistakes that I have encountered that taxpayers do is poor retention of documentation to support expenditure. It's you can rely on bank statements, but to a certain extent, the source data is required, the invoices, the just to support that you have incurred this expense and it is in the production of income. So I think as an auditor, what I realized is that taxpayers really do not retain documentation adequately, and that then puts them in a disadvantage because they cannot support the expenditure. So I would advise particularly entrepreneurs who incur expenses as and when they're conducting their business to retain the documentation that is necessary to support expenditure.
So you will advise the entrepreneurs in order to avoid these mistakes. One of them will be to have a systems in place that actually assist them in retentions of these documents.
Correct.
But what else have you seen that you guys maybe perhaps you think that these entrepreneurs or these taxpayers should be doing in order to avoid these mistakes that you've observed in as a tax auditor?
Of course, they have to retain the documentation. There has to be an audit trail that ties back to the AFS. And taxpayers need to be mindful that, tax is a universe. So there is VAT. So what you declare for output purposes should ideally tie back to your gross income. So they need to be mindful that they need to be compliant on all areas of tax, and the financials need to be accurate and also supported by documentation, whether it's a cash register, whether it's invoices and the like. But they absolutely need to be aware of the fact that SARS does conduct integrated audits at some point where they look at all taxes. And that's something that you need to be mindful of even when you're conducting business on a day-to-day basis.
You spoke about integrated auditing that SARS does. What is that, and why will they be doing integrated auditing on a taxpayer?
I mean, SARS is there to ensure compliance,
correct,
right? To various tax acts. So you can have an isolated VAT audit, and you can also have an isolated income tax audit. But in certain occasions, there can be an integrated audit where SARS then looks at VAT and income tax and all other relevant taxes to check the tax health of a taxpayer. So those integrated audits are detailed and, as mentioned, focus on all areas of tax. So I would really advise entrepreneurs to have an understanding of the tax that apply to them, the various taxes that apply to them based on their operations, and how these are applied to their operations, and what's the necessary supporting documentation to be retained for compliance purposes.
You spoke about VAT tying up to the income, or rather revenue turnover. Have you encountered scenarios where an entrepreneur or a taxpayer submit VAT returns, VAT 201, but when you guys do an audit, they don't really tie up to the financial statement, in particular the revenue, right? When you multiply that so that it ties back. What has been your experience in that, and what normally led to that?
I think it's looking at them like taxpayers looking at these taxes in isolation and not being mindful of the fact that output is sales based. So it's a consumption tax. VAT is a consumption tax. So what you declare as output, means sales, means you've sold something. And that should ideally tie back to what you declared as gross income. It may not be the case that it will always tie back, but then that's where you need to ask your questions. Why does it not tie back?
Correct.
Is it a recognition issue? Perhaps you've recognized certain sales in a particular year and not for revenue purposes, but you need to ask yourself, why is there a discrepancy?
Correct.
and how then do you remedy the discrepancy accordingly?
So then we'll advise that maybe entrepreneurs, before even SARS comes knocking, they should actually be doing their own internal audit, making sure that whatever they're declaring to SARS is actually accurate, so that they avoid this time-consuming audit between themselves and SARS. Having been an auditor, you walked the journey of the tax system, and somehow probably it contributed to you understanding the tax system, the South African tax. How did you, be an auditor, tax auditor at SARS at that particular point in time, contribute to your understanding of South African tax system?
So my career started at SARS, and I think anyone who has a tax career should endeavor to at some point be at SARS. It gives you a view of what goes on from the other side. SARS conducts audits based on procedures. So they have lists of procedures to be followed for particular audits, and how they apply those procedures is from a risk-based perspective. So what is the risk that is potentially linked to this taxpayer, and how do we then identify the gaps within their declaration or their tax returns? They do focus on the Fs as well. So what you have declared as your financial position is something that SARS would also look quite closely to. I think being an auditor helps you understand tax from the other side. It helps you get an appreciation of what is viewed as risk from the other side, and that then informs how you advise clients, maybe in a consulting role, or if you are in-house, how then do you mitigate these risks from the inside in order to improve efficiencies, also from a SARS perspective and also from the taxpayer.
You already touched on sort of roles that the tax auditor actually plays in promoting tax compliance. But I'm going to ask that question so that we summarize this question. What's your take with the tax auditors in relation, their role rather, in promoting tax compliance?
Tax auditors are very, very important. I mean, for just revenue collection for the country as well. Tax auditors play a key role in also educating taxpayers. And I think the education part should go both ways. Correct. Where taxpayers are educated by SARS, and taxpayers also take the opportunity to educate SARS. Perhaps there are nuances that are specific to the particular industry. I mean, SARS auditors are auditors. They may not know a lot about mining or the various industries, telecoms and the like. So if there are specifics that are industry-based, it is then an opportunity for taxpayers to also educate SARS. But to answer your question, it's imperative that auditors also play that role of advising taxpayers and also raising awareness around the tax system and compliance from a taxpayer's perspective.
I'm a soccer fan, right? Or a football fan, right? And you earlier on, you mentioned that there are certain industry-related things that may not be applicable, say in mining, and they might be applicable to specifically for IT space, and that some people might not be having understanding of those, but having being educated or empowered by the taxpayers themselves, and the tax authorities can actually amend or approach those issues in line with having a better understanding of that particular industry. So my question then is, in your career, have you encountered scenarios where there were specific things that you felt that the industry, that particular industry, had to go and actually educate the tax authorities, and that maybe end up leading to changes in the tax provisions to align the two parties?
Sure. If you've ever gone through an audit with SARS, what you will understand, or any other revenue authorities, it's a timely exercise.
Correct.
It's a costly exercise.
Yeah.
So where applicable, taxpayers can apply for things such as rulings.
Yes.
Because when you apply for a ruling, you're essentially saying, I know this is what the law says. However, these are the facts as they apply to my business.
Correct.
And I'm applying for this ruling to notify you of how these matters apply. It's not necessarily tax leakage. It may be an industry-based phenomenon. I'll make an example about, let's say, the fintech space, where it's concerned about movement of money. You may be concerned about whether or not this falls under exempt supplies or for VAT purposes. Should we zero rate these transactions that our clients enter into because it's concerned with money? It may not be a traditional bank as defined. However, these specifically apply to this industry. So in such a case, lobbying is quite important, where you have industry leaders that can approach the tax authority to say, this is what applies to our industry, and therefore we apply for a ruling that can be applied across the board. That helps in a lot of ways. The most important one being efficiencies. So you've got a defined position, you've got certainty, you have an understanding of how the law will be applied, and also it eliminates the need for audits.
Correct.
So then the taxpayer saves time, and SARS saves time, and tax is collected as it should be based on the ruling. So it is important for taxpayers to educate SARS and to notify SARS of the nuances that apply to their industry. Speaking of soccer, while at SARS, I did do an audit for one of the soccer clubs, and what we found was that there were expenses that were claimed by this team, and that then probed the question as to whether other teams are following the same kind of logic. They're deducting expenses which should not be claimed. And it was found to be so. So that's where the importance of industry lobbying comes in, where these are sound expenses that should be claimed, or that's the approach that SARS may apply to do audits on that industry. So again, it goes back to clients or taxpayers having an understanding of what applies to them, and also how to efficiently communicate that.
It sounds and I think this is what I'm appreciating, and what you're just sharing, that it sounds like there need to be this open conversation on communication between taxpayers and SARS, and the reality, or rather the perception out there, is that, you know, there's that tension between SARS and taxpayers. And when you are bringing this awareness like you're doing, say, listen, taxpayer, listen, entrepreneurs, as an industry, maybe perhaps you need to start looking at things, how you do business, maybe find a way of lobbying, maybe find a way of having that conversation with SARS, but bringing it to SARS attention how you guys do things. But equally so, SARS will educate you to say, hang on, but this is how these things should actually be applied. We understand how you guys do things as an industry. However, this is how we see that as tax authority, and I think that's why it's so important to have that positive relationship between what you call SARS and taxpayers. Absolutely. But how can taxpayers build that positive relationship with SARS?
I mean, taxpayers ideally don't want to interact with SARS, but you're quite right. It is a relationship. It is important that, there's understanding on both sides. And it is important that taxpayers and SARS alike are willing to hear each other. We do have things like the Tax Administration Act, which also speaks to how taxpayers should interact with SARS, which is quite great for South Africa taxpayers and SARS. But once you have been engaged for an audit by SARS, be transparent. Provide the information that is required. SARS will typically give you a deadline. Make sure that the findings that are reached are based on the correct information and the correct understanding of your business and your operations.
Oh, that's good. Currently, maybe let's speak about what you do. I mean, you specialize with transfer pricing. Yes, of course, you do other types of tax, be it VAT, be it income tax, but your specialty is coming from that angle of transfer pricing. Maybe just unpack in a simple terms. What is the transfer pricing and what is this animal? How is it even regulated and who is it applicable to?
Sure. Transfer pricing is concerned about transactions that occur between related parties. And the founding principle of transfer pricing is that related parties need to trade at arm's length. What does arm's length mean?
Correct.
In a nutshell, it means trade as though you're not related. I try to explain this by saying, I have a younger sister and sometimes she'll borrow money from me and I will give her the money, but there will be no fixed repayment terms. There will be no interest charged. But if she were to go to a bank, the situation would be incredibly different.
Correct.
And the bank is not related. Me and her are related. So you can understand why this is a concern for revenue authorities. In South Africa, transfer pricing is applicable to cross-border transactions. So in other words, when you have a multinational entity that has operations in South Africa and enters into transactions with related parties in other countries, transfer pricing would be applicable. And it would require that these entities trade as though they are non-related. You need to do what we call a functional analysis to determine whether, the pricing of the transaction. What does a functional analysis mean? It means you need to look at the functions that are performed by the parties to the transactions. You need to look at the assets that are used by the parties to the transaction and the risks that are assumed by these parties. That then informs the pricing. I'll make an example about a service provider. So if you're providing services, no one provides services for free. And no one provides services to not make money for less than what they have incurred. So you would look at the services that are provided, the risks that are assumed by the parties, and the assets that are used by the parties, and then determine what kind of remuneration should be provided to the service provider and what then are the terms of these entities trading. In other countries, so the reason why we don't have domestic transfer pricing in South Africa is because our act is so elaborate and it has anti-avoidance rules that would typically catch transactions that occur that are not commercially viable between related parties. So transfer pricing, Section 31 of the Act, is limited to cross-border transactions. In other countries, you have what they call domestic transfer pricing. So even within the country, if there are related parties in country, those need to abide by transfer pricing rules. What are transfer pricing rules? We look at the OECD guidelines. And the OECD guidelines will speak to how you perform a functional analysis. It would speak to how you price certain transactions. It calls for the accurate delineation of transactions. So it says, look at each transaction individually. And these guidelines apply globally. That's the nice thing about transfer pricing. It doesn't limit you to a particular country. You can apply the same principles in other countries. Many countries are signatories to the OECD, which would mean they've adopted the OECD as their local law for transfer pricing purposes, and you would rely on those guidelines. It's a 700-page document, very detailed, but very helpful in trying to identify the transactions that occur and also how these transactions are remunerated. You can, so through my career as a transfer pricing specialist, I have worked in various countries. I have done work for multiple countries in Africa and abroad. And you can literally apply these principles anyway. So you can even get a job in another country through transfer pricing. You can do work for clients in other countries. I've done work in Zambia, in Uganda, in Tanzania. I actually got seconded to Tanzania and lived there for a year while they had incorporated transfer pricing regulations in 2014. So following that, then everyone wanted to understand, how do we comply with transfer pricing rules? And as such, I was based in another country educating and also doing work around transfer pricing. So I'd advise anyone that has an interest in transfer pricing to go for it, because it really makes the world your oyster, and it really does link you up to possibilities outside of South Africa. It is not a separate tax. Transfer pricing is not a separate tax, but to a large extent, it then determines what your income tax would be based on the pricing of the transactions. You can imagine a distributor in South Africa that buys products from related parties and sells these products to a non-related party. That distributor has to follow the transfer pricing regulations because they are exposed by virtue of purchasing goods from a related party.
What has been the common mistakes that you've seen multinational companies actually? Because from the sound of it is that those will be probably affected by this this transfer pricing will typically be multinational, right, in the main. What has been your experience in terms of the common mistakes that these multinational companies actually make?
You know, I don't think the mistake is really a TP mistake as such. I think it's a tax mistake, and it goes back to the whole retention of documentation and making sure that the story is sound. So you would typically have an agreement with your related party. You would have financials that speak to your transactions, and then those two need to be, and you'd have the conduct, what actually happens, right? So you have to ensure that the agreements agree to the conduct, the actual engagement, whether in the case of services, the actual services that are provided. And that needs to also speak to your financials. So for instance, if you're a service provider and we've done this benchmarking study and determined that for the services you provide, you ought to earn a margin of 10%, your agreement needs to speak to that, and your as needs to also speak to that. So your as needs to reflect that 10% margin on total costs, let's say. So again, it's a story of making sure these are aligned, because when the tax authorities come in, that's what they'll be looking for. Are you adequately remunerated? Do you actually provide these services? Do your agreements tie back to the services that are provided?
Okay, that's interesting. You spoke about traveling, and you spoke about, maybe let's bring this element. You spoke about being stationed in Tanzania, I think, if I heard correctly, Zambia. What has been the most exciting country that you've worked in through transfer pricing, and why that country was the most interesting?
It's difficult to choose one, but of course, Tanzania was an exciting one based on the fact that regulations were fairly new. So a lot of taxpayers then needed to get an understanding of their pricing. Go back to the drawing board. Are we pricing correctly? And are we? Is our transfer pricing aligned to the Fs, and the conduct and so forth? The revenue authorities in Tanzania, well, in most countries, are quite aggressive. I think you've also heard in the South African context politicians referencing transfer pricing, saying we need to be aggressive in terms of applying the transfer pricing rules to ensure that the fiscus is not detrimented by multinationals carrying on operations in the country. So I think I can't select one. It's all in how they apply the law. It's all in how many of these cases are actually tested, and how do we reach a conclusion? Because from a transfer pricing perspective, you need to be mindful that a conclusion that is reached through an audit will have an impact on your pricing going forward. So all of these countries, Zambia is quite aggressive with their audits. A lot of the countries are quite active with audits, but that's how the law improves, right? So where taxpayers are also saying, hang on, revenue authority, this is an incorrect assessment of my operations. So those are the exciting things, to see how far these cases go, how many of them actually get litigated, because that then sets precedent.
You speak about aggressive. I mean, you remind me. I was watching one of the breakaway sessions of B20 just recently, the launch of B20 that took place in Cape Town, and I think, speaking of revenue collections, and I mean, various panelists from various countries spoke to that about what does the revenue authorities role, what role do they play in terms of revenue collections, whether we need to capacitate these institutions. So I presume that these countries that were aggressive when it comes to transfer pricing, you'll need expertise. You need people with knowledge. You'll need capacity, and therefore they need to be supported. Probably their respective national treasury departments support them, gives them funding, which gives me that conversation, or the story that has been going around between our national treasury and commissioners. But we're not going to dwell into those are the yes. But I think it's about that. Maybe, I mean, even South Africa, you saw the budget speech was postponed, and there's that thing to say, you know what, we need more money. We need to collect revenue, and maybe that's something that we need to look into as the country, where we become more aggressive in terms of implementing the transfer pricing. But then that will mean that we need to capacitate SARS. So which you echo what the commissioner was saying, to say we need to be capacitated if for us were to implement certain rules, because they require specialized. They require the likes of Disebo. They don't come cheap to sit there and actually implement this. But I'm just trying to summarize this in relation to what is currently happening in the country, where the commissioner and our current minister of finance, there's that conversation, or there's that back and forth where we're saying, one says I need to be capacitated because I need to remove inefficiencies that is within the tax administration side of things, and for that to happen I need money. And I think that inefficiencies probably is also around the transfer pricing. One needs to look at that to say, are multinational companies actually paying what they're supposed to be paying? But maybe speaking of that, there was this introduction of the minimum tax that multinational companies has to pay. Will that help though? And what's your take on that on a high level? What's your take on that?
I think just to go back, scarcity is real in transfer pricing, and this is not a South African phenomenon. And that's why you find institutions such as tax inspectors without borders, where they go into particular countries and try and build capacity and assist countries that maybe do have regulations but are unable to enforce them due to a scarcity of skills. You also find the likes of ATAF, where you've got Africans gathering to say, how do we drive tax policy, and how do we benefit from how do we leverage from each other's skills and build capacity as well in the continent? Those are very important, and various revenue authorities in Africa are getting assisted from more matured countries, particularly around Europe, that come around and build capacity and assist with audits. You also have mechanisms such as advanced pricing agreements. So it's almost like a ruling, but it's in the context of transfer pricing, where a taxpayer will approach a revenue authority to say, this is how I price, and I want to enter into an advanced pricing agreement with you, SARS, to accept my pricing for the next 5 years. That again improves certainty, which is what majority of taxpayers are looking for, and it reduces efficiency. It increases efficiency. So then there won't be an audit because you've agreed pricing with SARS. Again, there is limited capacity to facilitate those APAs, and there's limited capacity to actually review all the documentation to agree this pricing upfront, because you need to cover your bases as SARS to say I'm accepting this pricing for a known period of time, but it's quite a long period of time. Okay. Touching on and I think the minimum tax as well is one of those things that is relatively new in terms of incorporation. South Africa has signed on and said this is what we are willing to implement. But essentially what it says is taxpayers need to pay a minimum tax of 15% in jurisdictions they operate in. You may wonder if that's relevant if you look at the South African context, where our tax rate is in the higher 20s. So what would lead to a 15% tax rate in our context? But in other countries, tax is already low. The rate is already low. And other industries also have very high deductions. So in other words, through those deductions, the effective tax rate it becomes low. In such instances, what these regulations require is that there be a top-up tax. And the idea here is to make sure that everyone gets their fair share of tax. Yes.
Correct. Okay, that's interesting. Maybe having traveled and, transfer price is quite... can be another complicated tax provisions dealing with that. I'm sure you get so much tired. And you traveled a lot with transfer price. I'm sure then when you're not doing much, you would like to travel. Where would you travel anywhere if you were to travel anywhere in the world currently, where would you go?
I've done a lot of East Africa and Southern Africa. The one part of Africa that I haven't really done is West Africa. So it's always been a dream of mine to see West Africa, particularly Ghana and Senegal. They have interesting cuisines, beaches, just a way of life that is maybe different from the other areas in Africa. I would certainly like to travel to those countries.
I heard someone telling me that West African men are actually...
I'll tell you when
West
I come
African
back.
men. Someone told me that Disebo Disebo has an appetite for West African men. I don't know about that, but yes, someone whispered, but we'll leave that.
I'll provide feedback when I come back.
So, in this segment, we've got a segment where a guest has to sing for us. Disebo cannot live here without singing for us. Disebo, we've got a culture here where someone has to sing for us. Please sing, even if it's just 10 seconds. What would you like to sing?
Okay, this is really unfair, Shiliboy, because I need to think of a song and I need to think of an artist.
You know why we're doing that? We're doing that because people think that as tax people, we are nerds. Mm-hmm. So we need to bring to this and show people that actually, hey, we've got life.
Okay, I'll do a well-known Jennifer Hudson song.
Okay.
I think it's called "Giving Myself Over."
Let's hear. That's fine.
I'm giving myself over to you, body and soul. I'm giving it over. I'm giving myself over to you now.
Oh, wow. And here she didn't want to sing. She sings so perfectly. Guys, Jennifer, I said you better watch out. Better watch out. Thank you so much for watching. My name is Disebo Makhetha. I'm your host for the Tax Awareness Show. Bring everything awareness to the tax system in South Africa. Thank you so much for watching and good night.